Morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday. It's February 24th. Light day today, so we'll just jump right into it. We got two items on the docket, and we'll start off with the new home sales for the month of January. So, the previous month in December, we finished up 1,000 new home sales. Now, the forecast for January was supposed to spike up to 586,000, and it kind of settled right in the middle, about 555,000 new home sales for the month of January. So, not bad. It still went up, which is a good sign. Not quite to expectations, but again, still upward swing, which is obviously a positive news here. Last but not least, we got the final number for consumer sentiment. We do get two numbers, and this is the final one. So the previous one came in at 98.5, and the forecast for February came in at 96, and pretty much came in line at it dropped down to 96.3. So the final revise comes in at 96.3 for the month of February. So we're still feeling pretty good, but not quite as rosy as they were in January. So let's go ahead and take a look here at the headline news. And the stock market's down, and it's basically taken in. The stock market's at a pretty high level. Dow's been one of the longest streaks of increases, and it's at new levels each and every day for 10 days, which is like I think the longest streak since like 1984. And right now they're just simply profit taking. They're at high levels, so they're cashing in. Stocks come down, and they'll get back into the market once they get down to a certain level, because it went up so much so fast that now it's just time to do a short-term correction and cash in and get some profit taking here, and that's what you're kind of saying. So as a result, the bond market here is taking advantage of it. So what happens is that money comes out of the market, they sell, and then they put in mortgage-backed securities, which helps out interest rates here. So in this scenario, we are now touching the first level resistance again. We're up about 25 basis points, which does translate to better pricing today. Obviously, the one drawback is that we got this opening gap here, which could, again, easily bring this back down here. So once we've reached these levels in the past month or two, we basically got knocked down. So as you can see, we've got knocked down here. We reached this level, we got knocked down here. It happened back in January, so earlier in January as well. Again, just when you reach these levels, you may want to really be cautious and maybe cash in. So if you are basically looking to refinance or purchase and are floating your interest rate, you may want to kind of look at maybe taking advantage of it now and locking in case it gets worse. Because from the past 2 months, every time we reach this level, we got knocked down. So, all right, folks. So again, good news for people in interest rates. But if you want to keep floating, go ahead and keep floating. Maybe it gets better, but again, from past 2 months, once we reach this, the trend's we get knocked back down. All right, folks. So the good news, better interest rates going into the weekend. Hope you guys have a good weekend plans. If you guys need anything else or want to get more updates throughout the day, I do go to Twitter. I'm at Mike Bjork. Just stop by Twitter and hit maybe follow so that way you can get more updates throughout the day. Hope you guys have, again, a great weekend, and I look forward to see you guys on Monday. Thanks for watching. Bye-bye.